Today, the market indexes hit all-time highs on all three indexes, the Dow, the S&P, and the NASDAQ. Note how this uptrend started this week. There's your bullish harami inverted hammer. Remember, an inverted hammer, as well as a harami, confirms on positive trading the next day. In this case, stochastics in the oversold area, trading right on the 50-day moving average area. A gap up after a harami tells you there's probably an uptrend. But even more compelling is an inverted hammer signal. If it opens positive the next day, the probabilities of positive trading from that level is 95% or greater that you're going to be in an uptrend. Also, you add the fact that not only did it gap up, but it gapped up above the T-line and continued to trade higher, telling you the indexes being back up above the T-line were likely to be in an uptrend. We're at all-time highs, but there's a little bit reason to expect some profit taking. Not necessarily because we're at all-time highs, which everybody kind of infers. Look how far we've kind of moved away from the T-line. That puts us in a position where there might be some consolidation right in this area, either moving sideways or a pullback, waiting for the T-line to catch up. That same scenario can be applied to the NASDAQ, which also closed at an all-time high today. But notice where it came back up on this fast move here, right back up into the trend trajectory. It wouldn't be unusual to see the markets move sideways, waiting for the T-line to catch up. Here's another thing to always keep in your mental arsenal. If you're in a steady uptrend and they pull back, notice our bullish harami telling us the selling had stopped and then gapped up positive. But there's a very strong probability that if you see a trend with a pullback, that this next move is usually a fairly fast and hard move to get back up into that trend channel. Just something to use when you see this setup, that you might be able to take advantage of that trading individual stock prices. That same scenario can be applied to Apple Computer. After a nice, strong, steady uptrend, a pullback, and now this next move taking you pretty quick back up into the trend trajectory. But also note the other elements that you can see visually on a candlestick chart. The spinning top type day that used the 34 EMA as support, followed by a gap up above the T-line, starting the uptrend again. The same scenario applied to NVIDIA. A gap up through the T-line, likelihood they could come right back up into this trend channel. This is not unusual chart patterns. This is because this expected type of move is based upon what human nature does time after time. And note the expected move that we would anticipate on Amazon, that when you have a big price move and it consolidates and then starts back up, that this will usually be a steady eddy, meaning a 45 degree, until you see a sell signal and a close back below the T-line. Our recommendation today on RVNC was based upon the Morningstar signal, fry pan bottom, doji sandwich breakout that told us there was going to be more upside, now anticipating this wave right here will be the same magnitude as this wave right here, which is much more beneficial because of the magnitude or the trajectory of this price move being like this versus steady moves in an uptrend that may be moving more like this. When you can take advantage of knowing what's happening coming out of a candlestick pattern, it allows you to get much more excessive profitability when the market trend is moving up, or simply stated, much better way to make hay while the sun shines. That'll be it. We'll see you in the chat rooms.